crack on with our first panel, which is really setting the scene now of the current outlook, the state of play in relation to investment markets, the raising of capital, as well as some of the best advice in terms of what investors are looking for if you're in the entrepreneurial space. Let me introduce on the far side, Brian O'Connor is Investment Director with ISAF, needs no introduction, the Ireland Strategic Investment Fund, a war chest, 9 billion, about 500 million a year. It varies from year to year, but obviously driving forward long-term investment in Irish business. Beside him, we have Conor. Conor O'Sullivan is Investment Director with Atlantic Bridge. Conor has a lifetime of experience with Paladin Capital, Seraphim Capital, and one of the interesting things with Atlantic Bridge is the university bridge funds. You're going to hear a lot about spin-outs from universities today, early stage venture capital. And last, but by no means least, Donal, who has to catch a plane out of here, Donal McNicholas, Investment Director with Waterland Private Equity Investments. And of course, that's the Dublin office. They're a leading European mid-market private equity firm. So perhaps without further ado, I might start with you, Donal, just to say a little bit about Waterland and the current landscape as you see it.
Sure. Thank you, Ivan. So Donal McNicholas is my name. I'm a director in Waterland here in Dublin. So I suppose just by way of introduction to Waterland, we're a large mid-market European private equity firm. That means that we focus on businesses, I suppose in the Irish context, that would be relatively late stage, so businesses that are profitable, cash generating, growing well, where we see an opportunity to partner with the founders and owners, often family businesses, to really accelerate the growth of the business far in excess of what they would be able to do from their own resources. So we have a team of about 150 guys like me and guys and girls like me around Europe who focus on identifying those businesses, but also identifying add-on businesses, so bolt-on companies that we can acquire to grow the groups much faster than they could grow from their own resources. So that's our model.
So your average investment would be 5-10 million, would it?
Yeah, or larger, to be honest. So I suppose in the Irish market, that would probably be yes, but internationally we'll probably do typically larger.
And sectorally, any specialisation?
Not really, no. I mean, we have investments all across the chain here in Ireland. For example, we have a business, a nursing home business called Silverstream. We also have a fire sprinkler manufacturer, designer, installer called Rytech based down in Mullingar, and a company that provides electrical plant for data center construction.
And so typically your exit would be after X number of years, trade sale, IPO?
Yeah, more often than not. I suppose we would look to, we model an exit around sort of year 5, year 6, year 7, somewhere around there. And typically we would exit to, another private equity firm or sometimes a trade sale. That would be a decision made in conjunction with management, I suppose. And often the founders of the business, the management team, would then continue to partner with the next investor.
And how long are you in the Irish market?
Personally, I've been with Waterland 2 years. Waterland's has had a team on the ground here in Ireland about 2.5 years, but we would have made investments, I suppose, over the years, particularly for some of our European businesses, acquiring companies in Ireland for quite a bit longer.
Okay, Conor, Atlantic Bridge, discuss. And these university bridge funds.
Yeah, absolutely. Thanks, Ivan. So Atlantic Bridge is a multi-stage venture capital firm. We've been around for 2 decades, headquartered here in Ireland, but have offices in Europe, the UK and the US. The firm has raised over 1.3 billion euros across 8 funds over those last 2 decades. And we invest in very innovative deep tech companies here in Ireland and elsewhere. And we invest from the very early stage, as you mentioned there, Ivan. That includes researchers spinning out of universities here in Ireland, and also right through to the later stages as well. In terms of sector focus, deep tech is our sort of core focus, and that encompasses a number of different sectors. That can be medical devices, cybersecurity, artificial intelligence, semiconductors, quantum computing, anything that is very, very challenging to commercialize, and is built on intellectual property and know-how, and has very, very smart teams. We're experts in doing that. Some of the key investments successful investments that we made here in Ireland include Movidius and Decawave, which were acquired by Intel and Corvo for about $400 million each. So we have a successful track record here in Ireland and elsewhere.
And would you argue that you bring more than cash to the table? Things like legal protection for patents, copyrights, all that kind of, do you bring that kind of expertise?
We bring a huge network to bear in terms of the portfolio companies that we invest in. And at the very early stage, you really have to get hands-on in terms of building the teams, building the strategy of the company, and working with those founders who might be very technical minded and need development on the commercial side. And that's where we help to bring in people from our own network and other investors to build syndicates to help those companies grow from the very early stage. So the Atlantic Bridge model is all about bridging to different geographies and bridging to the next stage in terms of scaling.
And typically your average investment would it be as $500,000?
In the university bridge funds, so we now have two funds, 125 million euros under management. The second fund was raised last year. There are 4 universities in Ireland now, also partners and investors in that fund, the 4 largest, Trinity, UCD, UCC, and the University of Galway. Our typical investment is around €1 million and can go up to 2 million, and of course we then follow on from there.
Brian, ISAF needs not a lot of introduction. It's state and it's large and it's well established. Maybe we'll pivot on to Q4 2022. What's different than if we were having this discussion a year ago? And when we were talking last week, you said you're talking to people, some people whose head is in 2021 and some people are in a state of depression 2023. Maybe you just describe the current pipeline context. What's different?
Sure. So I think there's probably maybe 2 ways I kind of think about things on a relative basis and on an absolute basis. So on a relative basis, relative to a year ago or even 6 months ago, I think maybe risk capital has been repriced to some extent. Maybe it's a little bit harder to come by, and that which is there is maybe a little bit more hesitant. And so it's very easy to get caught up in that narrative. But if we look more on an absolute basis and you look over a longer time frame, I think there's still as many, if not more, different sources of capital available in the Irish market compared to 3 or 4 years ago, or even a little bit longer. So I think it's always good not to lose sight of that fact as well. And my comment about sort of some folks looking backwards and some folks looking forward, I think is really reflective of just it being a kind of a tricky, a real sort of turbulent point at the moment. And maybe there being a sense as well in some of the discussions that you feel are happening, or when folks are looking to put deals together, there's maybe a little bit more of a bid-ask spread than there has been in the past. And that always eventually closes, but it's I suppose the different perspectives that maybe an entrepreneur might be sort of thinking back to valuations or the mood or the kind of the environment that may have been 6 or 12 months ago, and that being a kind of an anchor point. And a lot of investors maybe just feeling a little bit uncertain at the moment, and maybe taking a little bit too much of a negative perception. And I think it's all about just working through and closing that bid-ask spread, because ultimately there is still reasonably significant amount of capital on one side of the market that's trying to find good places to invest and to make good deals.
Yeah, because if we look at it in empirical terms and look at Ireland, one of the most striking economic statistics is the amount of money in banks, in savings accounts, 146 billion, up 20 billion since the pandemic, has never been higher. So, I mean, the availability of capital and liquidity isn't actually an issue, is it?
Yeah, so look, I mean, I think it's tricky to be definitive on a question like that. So I think, banks are sort of one source of capital, but if you look at a lot of the more private sources, whether it's all of the kind of the funds and the ecosystem that exists here, I think that's what I really think of when you look at over, a 5 or a 10-year period. Like, I think the market here has evolved significantly, and there are many more folks at conferences like this on both sides of the agenda than there may have been 5 or 10 years ago. And so, I
You're
really
saying
do
bank
think,
debt is a thing of the past?
no, I wouldn't. What I would say is bank debt is one of many options, and there are more alternative options in the market now than there may have been in the past.
Okay, so for people who are seeking to raise capital, what do they need to do differently?
In some sense, maybe there's nothing one needs to do differently, in that what capital is looking for is good, productive businesses with attractive futures. But stepping back, I think trying to really have a sense of what an entrepreneur or a business's plan and future ambition is, being able to match those needs to the best type of capital. So whether it's equity, whether it's debt, all of the different flavors of that, I think just being really, really clear on the various types that suit the agenda and the ambition of the business. I think that's something that becomes a little bit more important. And I think as well, one of the bigger questions that is rising to the fore for a lot of investors as they look at businesses now, and asking questions that maybe might not have been asked quite so much in the past, but it's really just trying to figure out how discretionary is the product or service that a business is producing is. And I think just understanding that and being able to articulate that story is perhaps a little bit more important than it may have been in the past.
Yeah, I can relate to that, because I was in the bookmaking business, and when there was a 40% reduction in discretionary income and spending in the last crash, people had to eat, people had to clothe themselves, they didn't have to have a bet. You want to talk about patient capital and debt capital. Just talk about that, Donal.
So I suppose one thing that strikes me about the Irish market, if you compare it to other European markets that we operate in, is probably one thing that isn't there. I suppose, if you look at where Ireland has come from over the last 50 years or so, it's been absolute transformation in terms of the economy, right? So we've moved from being, frankly, one of the poorest countries in Europe to one of the richest countries in Europe in the space of a very, very short space of time, in historical terms. And as a result, then I think part of that is that we don't have maybe the kind of reservoir of wealth and, I suppose, family wealth that you would have in some other European countries. Particularly see that in the Nordics or the Benelux, and some of that, I suppose, is a legacy of colonies and things like that. Some of the historical facts of how other countries have evolved in Europe. But I suppose the positive of it is where it has ended up now, is there is a deep reservoir of I suppose what I would call patient capital, which is,
what is that?
Money, I suppose, that is prepared to invest in companies for the long term. And I think that's probably something that's, I think ISIF has done a phenomenal job in Ireland here of seeding a whole range of different investment funds, providing kind of, but at the end of the day, I suppose each of those funds is looking for a return, right? And I include ourselves in that. We all need to make a return, and therefore there is an exit point at some point in the future. So whether it's venture capital or private equity. And maybe one thing that's lacking in the Irish market a little bit is that sort of more patient family capital that could take a 20, 30, 40-year view on things. And I suppose that's just something that's going to take a little bit of time to develop.
When I talk about valuations, like, I'm old enough to remember that everything was valued as a multiple of EBITDA even. Now you don't even have to have revenue, I'm told. Just tell us about valuations. Are we in a down round, Conor?
I think at the later stages, valuations are much more based on the path to profitability, I would say. There's much more, that's come into focus much more than growth at all costs on the top line. So there's definitely, investors looking at rounds where, and they are repricing. I think you mentioned it, Brian, there, that the lofty valuations perhaps of last year are not necessarily still on the table. For the very best companies, it is very competitive out there in terms of the funding sources. So for the best companies, they will still find very good valuations.
So define best company. I mean, so I've got a new robotics invention, Internet of Things, AI, biotech. What's the sweet spot that you guys are looking for when you're looking, because it isn't a balance sheet, What is it that you're looking for?
No, I mean, we invest in mostly in our university bridge funds. A lot of the companies are pre-revenue, and a lot of times they're pre-commercial product as well. So what do you look for? The fundamentals which you look for in any business at any stage is the ambition of the management team, the know-how that they have that maybe others don't, the product differentiation in comparison to what's out there in the market, and the plan that they have in place and the milestones they have in place to de-risk the technology to a point where they can bring it to market and try and scale that business. And also think about raising the next round of funding. And so it's all about milestones at those very early stages, making sure they're achievable.
Is there anything as a red flag?
Anything a red flag? I mean, probably ultimately it comes down to ambition. We work with a lot of researchers. They have to have the ambition to start a company, bring in people from the outside to support them, understand their gaps in their knowledge and their capabilities, particularly on the commercial side, the go-to-market, and being able to share that journey with people who have perhaps done it before and can bring in that expertise that they don't have. So being humble in understanding where those gaps are, if that's a bit of a red flag if some of those founders are sort of hell-bent on doing it themselves and they'll do everything and they don't sort of understand some of their weaknesses. Sometimes you have to point them out, but it's those that understand how they can plug those gaps. That's the key thing.
So typically when you're doing your due diligence, what would you say, Brian, are the key boxes you're looking to tick, even if it's an engineering firm, infrastructural firm, or one of the modern tech firms?
So at the moment, I mean, one of the things that I think everybody is looking a little bit more acutely at is, things like sort of supply chain and sort of input costs. Again, that's very topical. But things that you typically look for, kind of customer concentration, where what sort of relationships, and again, depending on the type of business, to what extent is there a sort of a natural uplift or increase in sort of the spend per customer over time. There are some businesses where that can naturally be expected to grow with usage or penetration, others where that isn't so much a factor. But I think there's some of the things that can go maybe towards some of Conor's points about being moving somebody from sort of good into the kind of the very solid category.
Do you have any view of B2B versus B2C?
Difficult to have a kind of a general view. I think some folks are a little bit more specialised in one versus the other, but I think it's probably fair to say that general B2C is seen as being a little bit of more difficult market, and valuations or metrics often tend to not be as lofty in that sector as in a B2B sector.
Let's talk geographic market orientation. In terms of a company, if its principal market is Ireland, UK, EU, US, Asia, what's the sweet spots there, Donal?
So for us, I suppose one of the challenges maybe is businesses that are purely focused on the domestic market in Ireland. I think that's probably an area where I think it's probably more difficult to raise capital just because of the scale of the market itself. I mean, if you consider that there's similar population in the Midlands in the UK as there is in Ireland, then it's just that little bit more difficult, I suppose, to make a business case for a significant scale investment in a business that is purely domestic in Ireland. But that being said, one thing that we do see is that a lot of the companies that we're talking to and that we've invested in would have done very well in terms of in terms of being able to achieve a leadership position in the Irish market. Mostly often through working with multinational companies in the Irish market. I think that's a hidden strength of the Irish economy, is that we have this huge multinational sector, whether it's IT, data centers, med tech, pharma, aircraft leasing. These are huge industries, and the companies that are in the supply chain to those industries that are Irish family businesses that have grown up in those industries are operating at a world-class standard. So what they do have is phenomenal operational expertise and commercial nous, I suppose, that we can then leverage to be able to take those companies global, or take them, to a European scale. And that's something that's very exciting and interesting for us. So that's something we've seen, I suppose, almost a pattern emerging now at this stage. We see these really good businesses that have, become strong players in the Irish market that we could take international through M&A particularly. because they have that really strong operational capability that they've built up working with the multinationals.
There's a lot of commentary about difficulties in the UK economy post-Brexit, long-term decline and so on. Do you have any, and conversely the strength of the US dollar and so on, do you have any views on UK versus US markets?
Being someone that's just moved to Ireland from the UK last year.
You're a refugee, are you?
The difference is quite stark here in terms of the support that a lot of Irish government agencies are providing to the startup sector, and the ambition of people and the tech companies that are here. It's an incredibly positive environment versus perhaps in the UK. That's my own personal opinion. But the UK is a significant market and always will be. And for Irish companies looking to scale, the obvious jump-off point is into the UK. They may be working with Irish companies or multinational companies here in Ireland, but then looking to bring that software or that technology to a much larger organisation in the UK. The parent company, for example, that is proving ground here in Ireland, and expanding it to the UK is a very well-trodden path. And then going global as well. So the UK will always be significant. It has some of the best talent and the best companies around, and a huge venture ecosystem there that is now looking at Ireland and saying, how can we do more deals here in Ireland? They're coming to us as a specialist investor on the ground and saying, how can we get into some of your portfolio companies at later stages? So that's a very good thing for Ireland, and we need to keep those connections very, very strong, and hopefully that will always be the case.
Any international perspective?
Yeah, so look, for ISIF, a lot of what we like to do is sort of back and support scale. So when we back a fund or when we back a company, it's with a view to helping sort of more indigenous businesses get bigger and reach that scale. And international markets are a huge part of that. I think it just depends so much on the nature of the business or what sector they're in. I'd echo Conor's point. The UK, may not be growing as fast or maybe kind of flatlining a little bit at the moment, but it's still a market that's roughly 10 times the size of here, so is always going to be attractive, and is always seen as a very easy market to enter. Similar to the US, we've got lots of cultural connections, lots of FDI connections, but as well as that, sort of if anything, the kind of the Brexit experience has just emphasised the importance of looking to other parts of Europe, and I think there are some sectors of the economy that are being quite more focused on some other continental European countries as well. So look, I think it's kind of hard to answer in the abstract, but both are very big economies, and as a small open country for any Irish business to reach truly sort of large scale, you're going to have to look at one or many of those.
Okay, I recently chaired an all-day summit on ESG, and what I learned were these new SFDR directives on sustainability finance. I've learned about the mandate that investors of funds are being given, that they must do it. But I also learned that the most profitable thing was anti-tank missiles to get into for 2023. All the sort of nasty ones, gambling, tobacco, alcohol, plastics, all that kind of thing. What does this sustainability agenda is not going to go away. It's here to stay for this millennium. What is it impacting ESG? What does it mean to you in carrying out your investment function?
So certainly for Waterland, sustainability has actually been one of our kind of 4 core investment themes since the start 20 years ago. So that maybe, what we've probably found over the years is it's been the one that we've been able to do the least amount of deal flow through and transactions in.
Wow.
I think largely because the market wasn't ready for a long time, I suppose. But what we see now is an absolute, 180 turn in the last, I'd say, 2 years or so now, in terms of, I suppose, quite a lot of the need for sustainability, the need for like action on climate change and things like that. I think at a consumer level.
What does that mean, that you're investing in wind energy or solar energy? What does it actually mean on
for
a
us,
cold Monday morning?
Yeah, we're not an infrastructure investor as such, so we don't
Okay.
invest in the assets, but we do, and we look closely at investments in, I suppose, the picks and shovels, the supply chain into those industries, right? So we look very closely, and I think one of the themes that we're seeing a lot of interesting investments around is around electrification as a trend. If you think about what decarbonisation means, practically it means electrifying nearly everything, whether
Transport,
that's heat, transport, whatever it is,
environment, heat,
you know, and that creates enormous opportunities for us, I suppose, in terms of kind of the various, you know, even down to like power cables, grid systems, those kind of things. Somebody needs to build all of that. It is a transformative move over the next 20, 30 years. It's also something that's effectively government backed now, you know, so you know, you can be very certain that money is going to be there. So as an investor, it's a strong signal in the market that investment is going to be made. The EU in particular is very, very strong on that. So that's what we like to see, I suppose, as a kind of a trend that is emerging, that creates a growing market that is, you know, strongly government backed, I suppose, and that creates a lot of opportunities. So I think, but there's another whole dimension to it, which is, you know, we see it's not just in businesses that have kind of ESG as their core focus, if you like. So it's not just about companies that are sustainable by definition. It's also about how companies that are not, I suppose, necessarily focused on ESG as such, or the business model doesn't depend on it, but their customers and particularly their employees are looking for that sense of purpose and that sense of that the company is doing something, is making a positive contribution in the world, and is certainly not making a negative contribution in the world. So we're seeing that across our whole portfolio, you know, employees in particular. So there's demand from customers, but particularly from employees, that they want to see the companies making sustainable changes to their model, and is a huge tool for employee retention and attraction, which in this current labour market, despite what's going on in the tech world at the moment, is still a really big issue. So.
Okay, Conor?
Yeah, I think, you know, as fund managers, we all have an incredibly important part to play in the ESG agenda. You know, there was a lot of focus has been on publicly listed companies and their approach to ESG and the reporting requirements that are coming down the track and are already there. But in the private markets and even investing at the very early stage that we invest at, we have a very important role to play to shape and guide those companies in terms of their ESG policies and how do they address.
Is that to do with diversity or governance or what?
It's particularly, yeah, well, all of those things. You know, we've made an investment in a company called Inclusio, which is focused on diversity, inclusion, analytics, and metrics within organisations. I think Sandra, I saw her at the back of the room, Sandra Healy, the CEO and founder of that business. We're investors in Mana, the drone delivery business, which is all about reducing carbon emissions in the last mile of delivery, and how do you do that through you know, electrified drones. And we've invested in a company called Ubotica, which is all about bringing artificial intelligence on board satellites in space, which is able, so you can disseminate insights and analytics on climate changes from satellites in space in a much faster way, a much more energy efficient way than using data centers and terminals on the ground. So it is a huge focus for us in all of the investment decisions that we make, and we try to find companies that address the biggest challenges in ESG. Cybersecurity and governance is also a very, very big theme. Protection of critical national infrastructure, that falls into that category as well. So it's all of those things.
Given, Brian, your state ownership, this is part of your DNA, I suppose.
Yeah, look, absolutely. So we've been asking lots more questions of our investees and the funds we back under the kind of the ESG headings for the last couple of years, even though we've always been focused on it even prior to that. And look, I think one of the sort of the challenges maybe at the moment is you know, everyone is focused on it. It means something slightly different to everybody. And I heard a great analogy where someone said if you looked at sort of the accounting standards kind of 50 years ago internationally, there were various flavors and they were all a little bit different. different, but gradually over a very long period they've converged, that there's a lot more homogeneity now, and that perhaps the ESG sector is in a similar situation right now. There's lots of metrics, lots of consultants, lots of different things one could focus on, but not quite a consensus or an agreement on what it means. And I think that's a journey that probably converges over time. But there's also an element that, I think for many folks, ESG is, let's just be kind of, maybe to be very blunt, it's about doing good. And doing good is sort of different for everybody. So that there won't necessarily be, somebody might be a little bit more focused on diversity or sustainability or governance, and that there's always probably going to be a little bit of scope for difference between all of those as well.
Okay, we've a minute left. If people are listening to you, Waterland, Atlantic, ISIF, and want to get some of your loot, just do a little pitch of how best to interact with you if they like the cut of your jib.
Yeah, sure. So look, in my case, I'm sorry, I won't be able to stick around today, but by all means, please do send me an email. Our contact details are available on our website. I suppose our focus is on companies that are quite established, I suppose, sort of typically 3-4 million euro of EBITDA. So if you're in that bracket and you're looking for someone to help you to really scale the business internationally and support you on that journey, we'd be delighted to chat.
If you've got a really interesting technology that has been developed over a period of time, and you've got a great team, but you need help putting that, augmenting
You won't
that team.
take their kidneys and their liver, just their kidneys.
We want to have those conversations as early as possible in the journey before companies are even incorporated, to see how those projects and those research projects develop over an 18 or 24-month period. So it's never too early to speak to us. You don't have to have a full pitch. We're here to listen to it and see how that journey changes over time.
Open for business, Brian?
Yeah, similarly, the door is always open to myself or one of the team, and we essentially look for two things: a fund or a platform that may have a proposal to support some element of the ecosystem, and or a slightly more mature business who may be interested in direct investment, be that debt and or equity, where sort of ISIF's longer term nature can allow a business to do something that otherwise they may not be able to.
All right, please show your appreciation for Conor, Donal and Brian.